Walmart Q1 2026 earnings highlights. Walmart reported fiscal Q1 2026, February-April 2025, results with modest top-line growth. Revenue was $165.61 billion, up 2.5% year-on-year. GAAP net income fell to $4.45 billion, 56 cents per share, from $5.10 billion, 63 cents, a year ago. On an adjusted basis, EPS was 61 cents, beating the 58 cents FactSet consensus. Key takeaways. Revenue, $165.61 billion, plus 2.5% YOY. EPS, GAAP 56 cents versus 63 cents prior year. EPS, ADJ 61 cents, above the 58 cents forecast. Comparable sales, U.S. comps plus 4.5% in Q1, driven by groceries and health/wellness. Global e-commerce sales jumped 22%. Guidance, Walmart reaffirmed its FY 2026 outlook, keeping full-year sales growth guidance intact, and expects Q2 sales up about 3.5 to 4.5%. The company withheld quarterly profit guidance amid tariff uncertainties. Despite the EPS beat, margins are under pressure from a tough product mix and inflation. Management noted that higher labor and supply chain costs dented gross margin, though e-commerce gains and disciplined costs helped profits. Overall, Walmart beat or met estimates on the quarter, but its cautious tone dominated headlines. Market reaction and stock performance. Walmart's stock reaction was mixed but generally positive around the release. On the morning of the report, Walmart shares rose nearly 3% in pre-market trading as investors digested the upside surprises. Later sessions saw volatility, reflecting concerns about tariffs and consumer spending. Pre-earnings, Walmart shares were already strong, trading near $96, down slightly from a February high around $105, and up 7% year-to-date, outperforming the flat S&P 500. Analysts had set high expectations. All 19 analysts tracked by Visible Alpha rate Walmart a buy, with an average price target around $111. That consensus, 15% above prevailing prices, and Walmart's premium valuation, roughly 25 times earnings versus 10-year average 20 times, suggest optimism is baked in. Citi maintained a buy on Walmart with a $120 target after Q1. Overall, Wall Street expects Walmart's resilient sales growth and dividend yield to keep the stock in favor, though tariffs and margins are watch points. Tariff impact on pricing and supply chain. A major theme this quarter was Trump-era U.S.-China tariffs and their ripple effects. CEO Doug McMillon warned bluntly that even after recent tariff reductions, Walmart cannot fully absorb higher costs. Given the magnitude of the tariffs, even at the reduced levels, we aren't able to absorb all the pressure. In other words, some price hikes are coming. Walmart plans to keep prices as low as possible, but acknowledges that tariffs on hundreds of products, from electronics to apparel, are squeezing its famously low-price model. Walmart's supply chain has taken measures to soften the blow. About two-thirds of its merchandise is U.S.-sourced, and groceries, roughly 60% of U.S. sales, dominate its business, insulating it somewhat. Still, in Q1 many U.S. retailers reported surging imports as companies rushed to stockpile inventory before tariff hikes fully kicked in. For example, Amazon disclosed that many sellers imported goods in advance, allowing them to delay passing costs on to shoppers. By contrast, Walmart is now preparing to gradually pass through some tariff costs. McMillon and CFO John Rainey emphasized that pricing will rise only to offset new expenses, especially in non-grocery categories. Key tariff takeaways: Walmart has built-in hedges, but higher import taxes, some up to 30%, will still push prices up. The company said it expects to start raising prices later this month for products hit by tariffs. CEO McMillon's statements underline the risk. Walmart's low-price promise is being tested by trade policy. Analyst commentary and stock forecast. Leading analysts remain bullish on Walmart's long-term story, despite short-term noise. Morgan Stanley and Oppenheimer affirmed by ratings before and after the report. Morgan Stanley noted that Walmart is among the best positioned to navigate tariff challenges, given its scale, supply chain advantages, category mix, and price gaps. Several firms even raised targets. Oppenheimer lifted its Walmart target to $110, and Citi's $120 target implies nearly 25% upside. Analysts expected Q1 results to be strong, and Walmart delivered. For the year ahead, Visible Alpha shows the consensus remains robust. Full-year guidance was reiterated, see chart. Most traders had priced in the strong outcome, premiums widened afterward. In the earlier session of the earnings call transcript, Investing.com observed that Walmart beat expectations across the board and maintains a strong buy consensus. Market sentiment is that Walmart's defensive growth, grocery, healthcare, and e-commerce investments justify its valuation. Key forecasts: analysts expect roughly 4% annual sales growth for FY 2026 and continued mid-single-digit EPS growth, even if profit margins stay tight. Visible Alpha's $111 average target and price-to-earnings 25-30 times imply the stock's upside is tied to execution on tariffs and spending. In short, Wall Street gives Walmart the benefit of the doubt, but will watch for any guidance changes. Investor sentiment and outlook. Investors view Walmart as a barometer of U.S. consumer health. With inflation still elevated and consumer confidence near multi-year lows due to tariff worries, Walmart's results are scrutinized for clues on spending trends. In mid-2025, Reuters even called Walmart a canary in the coal mine for consumer behavior. On the positive side, Walmart's strong cash flow and defensive business give it resilience. The company just raised its dividend by 13% to 94 cents per share, 52nd straight year of hikes, underscoring confidence in stable earnings. That yield, 2%, and reliable growth appeal to income-minded investors amid market volatility. However, risks remain. High tariffs, even at 30%, could still crimp margins, and a slowdown in discretionary spending could blunt Walmart's growth. Inventory levels and higher freight costs are watch points. Competition from online retailers, Amazon's vast selection and low prices, and new entrants like Temu also keep pressure on Walmart's market share. For now, the consensus is that Walmart's opportunity lies in its balance of grocery strength, e-commerce gains, and supply chain scale. If Walmart navigates tariffs without spooking consumers, keeping core prices low while trimming costs, its stock may continue its uptrend. But investors will remain cautious until the trade picture clears. Bottom line, Walmart beat Q1 estimates and signaled it will stick to its guidance, even as it grapples with tariff-driven cost pressures. The stock reacted positively to the earnings beat, and analysts mostly raised their outlooks. Watch for management's handling of price increases and spending trends in Q2.